Thanks for joining us today. If I could ask you first of all, you did mention HSBC, but go to the banks in China overall. That was one of those that was downgraded. But first of all, you revised your criteria. Can you tell us exactly how you've changed it and how more stringent it is now?
Good morning. We have, it's not kind of we made it stringent or relaxed. It's just that we've kind of changed the approach. It's a building block approach. It's a more transparent approach. So it starts off with a starting point for a system. So each bank in that system will start off from that, and then depending on whether they're strong or weak, they will stack up against that. And that starting point is determined by the banking system health, which is where this whole issue about Asia versus the more developed system is coming up. That Asian systems' advantages are funding, whereas for the Western systems, it is not so much of a strength when you look at it relatively. And when you look at the bank ratings, while they're starting off from a little lower starting point in case of China, but because of their strong funding within China, as well as their strong position within China, they're coming up to the same point as those other banks in the more developed markets. Then the final dollop on that is that of the sovereign support, which gets added up because we expect Chinese government to be highly supportive, and hence you could see in these banks' ratings almost 4 notches are incorporated as support. So while you're looking at the rating to be higher for the same as Chinese banks, the standalone profiles are different.
What about the concerns about the credit bubble in China? Is that an impact at all? Is that a concern for you at S&P?
No, absolutely. As that is part of our concern, and that's why we have maintained our standalone ratings on Chinese banks at BBB- for a very long time, and that is because of this concern. Otherwise, their financials have improved, their capital has improved. From a balance sheet perspective, they look better, except that growth. And we are incorporating forward-looking risks emanating from that growth into our standalone assessment, and that's why they're not going up.
HSBC was targeted in it for a downgrade. Why is that? Is that because of the US concern as opposed to the Asian story?
Yeah, I think that's more of a large bank story, which it's the whole HSBC group that we look at as a globally diversified group. And so the action is not really driven by merely Hong Kong market. It's working along with the other larger multinational banks like Citibank and JP Morgan and Bank of America. So it's more coming in from the blended anchor point and the build-up over that, which still gets it to a point where despite the government support, which we expect to come from UK government for HSBC, the rating comes up 1 notch lower than the earlier rating, and that's why the downgrade.
A final thought for you, Ritesh. Japanese banks clearly a pretty rough year for Japan, but how do you view them? They're also a target for your concern in this report.
They are, but again, because the banks that we've released in this set are the strongest of Japanese banks. In fact, they're on the top 30 list of the world. That's why you're seeing that their ratings remain the same. Their standalones are lower, but they are benefiting from government support. Once again, Japan is a system where we expect support to come in from the government in times of distress. That has enabled the Japanese banks' ratings to stay the same. But let's keep in mind, these are the stronger banks in Japan.
Thank you for joining us today. Ritesh Maheshwari, the head of financial institutions
Thank you, John.
at Asia Pac for S&P. Many thanks for your time, Ritesh.